which means we have to start buying it in greater quantities. So don't like $5 a gallon gas, get ready for $10. Get ready for $15. And I'm not talking about over the next 50 years. I'm talking over the next 10, 15 years. Because all that inflation is going to come swarming back in here. What does that mean? Well, people are going to start looking for alternatives. So there's been a lot of talk about eBay and Bitcoin integration. The biggest driver for eBay to adopt Bitcoin, even though they hate the idea because they have PayPal and they make great percentage points on PayPal, the average person on eBay makes less than 15% profit margin. Because the marketplace, it's an unlimited marketplace. And if I'm charging too much for my widgets, Will's going to go on there and sell them for cheaper. And even though our widgets may be the same, his are cheaper, so people are going to buy them. So eBay knows that in order to maintain market share, they have to have razor-thin costs that they pass on to their merchants. So that is why, within the next 18 months, eBay will adopt Bitcoin. And that's not my opinion. That is what I have been told from executives at eBay. They don't have a choice. They have to. Imagine what's going to happen once eBay adopts Bitcoin. Now, all of a sudden, if you want to stay competitive, Amazon.com, anybody? Yeah. You're going to have to accept Bitcoin. People interview me all the time and they say, aren't you worried that governments are cracking down on Bitcoin? I say, no, because governments aren't the ones that rule the world. Goldman Sachs rules the world. And Goldman Sachs has investments in all these merchants, and these merchants are going to drive adoption. And they're going to go to the government and say, hey, guess what? I know you came out and you said Bitcoin is evil and people just use it for selling heroin to babies, but you're going to have to adopt, you're going to have some kind of accommodative stance towards Bitcoin. I believe that the country that adopts, that becomes accommodative to Bitcoin first will become what I call crypto Switzerland. Switzerland is a small, tiny, landlocked country in the middle of Europe. That 300 years ago, all they had was weird cheese, weird clothes, and weird music. Then all of a sudden, the government said, hey, only 25% of our country is actually inhabitable. In order for us to be sustainable as a country, we've got to have the corner on something. So we're going to own the finance market. The Italians owned it prior to that. The first banks in the world were created in Florence. The Medicis were the world's first central bankers. But they took their eye off the target. So Switzerland stepped in and said, okay, our government is going to now become highly accommodative to finance. Therefore, if you want to have your money in a safe, secure, and non-transparent way, bring it here. And this little tiny country became one of the wealthiest countries in the world. Monaco. I'm going to Monaco for a couple of weeks this summer. It's a tiny, tiny little place. It takes you about 10 minutes to drive across it. Just down there by Nice in the southeast corner of France. Per capita, one of the wealthiest places on earth. Because same thing. Their government said, hey, in order for us to survive, we've got to have a lot of money coming in. How are we going to do that? We're going to have no taxation, and we're going to have super solid regulatory requirements around confidentiality. So whichever country adopts the Monaco or the Switzerland approach to Bitcoin is going to win. More bad news. I don't believe it's going to be the United States. We're on the other. We're heading in the other direction. We're saying we need big government. We need big banks. We need too big to fails, and we won't tolerate anything that is financially risky, except what the banks do. So they won't accommodate Bitcoin in any major way. Now, eventually they'll have to, because they'll recognize, probably too late, that it's the way that things are going. Okay. So my recommendation, since so many of us are involved in Bitcoin-related ventures, start thinking about where you want your company to be located. Okay. Now, fortunately, it's very easy to up and move a company. So you don't physically have to be located somewhere else, but from a paperwork standpoint, you're going to want to start putting some considerations through. Now, I said I had an announcement. This summer, I am going to be involved in launching the world's first fully serviced Bitcoin publicly traded hedge fund, which is a huge, big, long title.
Yeah.
But basically, we're going to launch a hedge fund that is going to be, at its core, it's going to be Bitcoin related. But in every other sense, it's going to operate as a very traditional goal. And we've set ourselves the small goal of becoming bigger than Berkshire Hathaway. Small goal. But we think it's very, very feasible. Because what Bitcoin has done over the past, what traditional finance, what it took traditional finance 1,000 years to accomplish, going back to medieval merchants providing credit facilities for crusaders on their way across Europe to go fight in Jerusalem. That's how banking started. All the way up to derivatives and subprime mortgages and all that kind of stuff. It took 1,000 years for the traditional finance market to do that. Bitcoin has pretty much done most of that in 5 years. So the rate of innovation, the rate of adoption is far quicker in the crypto space. So I think the opportunity is going to be far, far bigger. I think that within 5 years that Bitcoin, the crypto periphery market, so the services market, is going to be probably a $5 trillion industry. Globally. So we were talking a little bit earlier about investments and whatnot. And BitPay getting $25 million of investment, that's great. But let's think about where that is in terms of WhatsApp for $18 billion. It's basically very small. The opportunities over the next 24 months in the crypto space are going to be where the crypto Googles, the crypto Facebooks, all of these entities are founded. Because you can get a lot for really cheap. So my advice to you is think big. This is going to be a multi-trillion-dollar industry very, very quickly. I'm not talking about 20 years, 30 years, 40 years. I'm talking about by the end of this decade. There are going to be events that come about in the world of finance, similar to the 2008 style movement, that are going to happen before the end of this decade. And if you're positioned correctly, you're going to make an awful lot of money. And whether Bitcoin turns out to be Google or Ask Jeeves doesn't really matter, because cryptocurrency is not going anywhere. Pandora's box has been opened, and it is the way moving forward. Transactions are going to have to be instant, secure, and near free. So my encouragement would be, my advice would be, figure out a way to service this market. When the gold rush happened in California, people made and lost fortunes in the same day because they find gold and someone would shoot them and take their gold. The people who actually made all the money in the gold rush were the people that provided the ancillary services. Levi Strauss, a lot of hotel chains that are still famous today, all sprang up from the California gold rush because they were saying, people are going to be coming here in their droves. They're going to need to be fed, watered, and housed, and clothed. Yeah. So we're going to provide those services. So think about the ancillary services. The actual investment markets, once Wall Street gets involved, are going to be gobbled up pretty quickly because they just have massive liquidity. Mining is already starting to become a non-profitable sector. That will become very similar to the traditional regular gold mine. You'll have major corporations that will do most of the mining. But the ancillary services are going to be where there's huge money to be made. So get your thinking hats on and think about what kind of services are people going to want. Advertising services, auditing services, accounting services. Huge industries. Alan's probably going to become the next PricewaterhouseCoopers.
Yeah.
But these are the terms that we need to be thinking of. So
You'd be calling our buddy Alan to get that.
that's right. But just on a closing point, and then I'll take any questions. But does anybody know what homebrew is or was?
Oh, I know what homebrew is.
Okay. So
computer.
Berkeley, right?
Oh, that's like a beer.
Oh, no.
Yeah.
Yeah, so in Berkeley, there was this little computer club that grew up in the 70s called Homebrew, where people could basically come along and present, look, I created a modem, and everyone would look at it, and investors would come. But as I go to these meetings, and in the past 3 months, I've probably been in about 20 different countries, attending meetings like this. Meetup.com is my favorite app. But meeting with people, and the ideas are coming along, and people are saying, hey, here's how you could launch an IPO using Bitcoin for free. Here's how you can audit the blockchain. Here's how you can do this. This is literally what's happening. And very, very soon, Wall Street is going to turn around and say, you know what? We're going to give CoinCPA $150 million, or whatever it is. And we're going to turn it into a major event in the crypto space. That's going to get the attention. It's only going to take a small tipping point like that, and the whole game will change. So don't hang around. Don't take a long time, because there's going to be a lot of money. Once this tech bubble bursts in Silicon Valley, which I think it's probably got maybe another 2 or 3 years, they're going to want somewhere to put their money. And crypto is going to be an enormously new space. Because people are looking at it right now as if it's technology, but it's not. It's finance. It's finance in a technology space. So, it's a great new world. It's going to be great. Don't decide to do something else, because you will regret it. I think cryptocurrency and agriculture are probably going to be 2 of the big growth industries of this century. Because everybody needs to eat, and everybody needs to transact. They're going to want to be able to do it cheaply and efficiently. So, that's my 2 cents.
Sweet.
At this week's emerging payments thing in Chicago, Second Market's representative said that they had just received the day before that their bank that they had a long-term relationship with was ending that relationship because of risk. In fact, everybody on the panel talked about that issue.
That was the state conference in Chicago, the CSBS. And I think it was sitting of the Second Market.
What do you think is the workaround there if you can't have access to traditional financial services?
So, the problem of traditional banking not getting involved will be solved by traditional banking not getting involved. What I mean by that is, somebody is going to come along and say to a company, I understand you can't get banking services. I am going to become your banker. I have the resources to do it. Now, the market's going to innovate. This idea that banks and the market can stop cryptocurrency is just ludicrous. It's absolutely ludicrous. Because whether it be hedge funds, whether it be institutional investment, whoever, they're going to come along and fill the gap. Because hedge funds make money any way they can. Okay? So if they see an opportunity, they are going to invest in it. So again, it comes back to the whole accommodative stance, right? We're going to see a situation where countries, for example, I'm in pretty advanced negotiations with Kenya, the country of Kenya in Africa. And they are saying, we want to become a crypto hub. Because we have been blocked from traditional banking infrastructure for so long, and it has inhibited our growth. But now that we are fairly resource rich, we want to be a player. And instead of following the West and starting like a brick and mortar banking infrastructure, we're going to leapfrog and go straight into the banking of the 21st century, which is fintech and cryptocurrency. So companies in Silicon Valley may find themselves having to be financed out of Nairobi. But we live in an age where it doesn't matter. You know, when I open up my laptop and log into my bank accounts to see how much my wife has been spending, it doesn't matter if my bank is located in Nairobi or Dublin or London or Belize, or it doesn't matter, as long as I have access to it. So we live literally in a very, very small world now. Information is just flowing so fast and so quickly. So yes, unfortunately, as I mentioned, American institutions are probably going to price themselves out or regulate themselves out of the opportunity here. But there's a whole big world out there.
For these institutions, why Bitcoin? Why not Ripple? Why not something that is not going to be jumping in value so much? We should have been done with that first stage. I would have looked a little earlier.
So volatility is opportunity. Okay, I don't buy blue chip stocks. Why? Because they'll go up 5% a year. Why do 99% of people buy blue chip stocks? Because they go up 5% a year. And then they get to the end of the year and they're like, I only made 5% this year. Well, of course you did, because you invested in something that's only going to make 5%. The reason why Wall Street is getting ready to roll over into cryptocurrency is because they can make a lot of money. You look at something and you say, whoa, this thing went up 100%, then down 50%, and you view that as being negative, or people in general do. But if you're an institutional high-frequency trading platform, you look at that like a license to print money.
I asked one. 99% of the people in this valley aren't institutional high trading platforms. To actually trade currency at the consumer level, we need to have something that doesn't have the volatility, that they're focused more on what's in their wallet and just trading with our friends at Overstock.
So I'm going to say something that might be blasphemous in this room, but I think we are a long way away from Bitcoin becoming a mainstream currency. Bitcoin is going to have to become an institutional platform first. I think we're going, one of the reasons why I'm so excited about getting Wall Street involved, and I have a commitment from a London-based hedge fund. These guys manage £9 billion, so almost $20 billion. They're going to sink about 40 million into Bitcoin in this first round. I think it's going to have to come from those. We're going to have an emerging here, right? So you've got Wall Street, Main Street, and Crypto Street. Crypto Street are all you guys, right? All the people who are involved in cryptocurrency technologies, starting up. We're going to see Wall Street and Crypto Street merge first before Main Street gets involved. Because if you're a vendor, if you're running a little mom and pop hardware store, you have been just fed a diatribe of negativity about Bitcoin over the last 12 months. So you believe it's used for illicit purposes, and that if they get involved, the IRS is going to shut down their store and they're going to get ripped off. Okay, now, some of that's true in various degrees depending on what you do. But imagine if Wells Fargo comes to that merchant and says, hey, by the way, we've now added a new arrow to your quiver of merchant processing. You can now accept cryptocurrency with all of the security precautions and protections that you currently receive with your debit or credit card merchant processing.
Yeah. Wells
Big circle.
When they could just do their own fees. Well, they can pull the fees. I mean, they could combine with B of A, Wells, B of A. Maybe even go, offshore. They can play the Swiss game, UBS, and whatnot. They can do their own coin. How are we going to get into that market when right now we think we are that market?
It's a great question. Bitcoin is going to be, Bitcoin is the gold standard. Okay? So anybody who wants to get involved is going to have a Bitcoin offering. Now, Wells may have a well coin or whatever, and that's fine. But Bitcoin is going to be the entry point for most of them, because it's already got the lion's share of market recognition and name branding and all that kind of stuff.
Yeah.
Now, like I said, I don't know if Bitcoin is Google or if it's asking. Something may turn up in the Bitcoin protocol 2 years from now that crashes the whole thing. Look what happened when the manageability issue came out. Price dropped significantly, very, very quickly, because of that fear, uncertainty, and doubt. Then people recognized, actually, this isn't what we were told it was by the mainstream media, the price went down. But they will get involved. They may develop their own coin, but I think the entry point is going to be big, in my opinion.
So, help me understand why governments aren't going to crack down on Bitcoin. I know, I agree with you that the banks rule the world and the governments are basically their henchmen. But how do the banks profit from Bitcoin, I guess is the fundamental question, when banks are currently profiting from the inflation?
Okay. So
which is not existent in Bitcoin.
Right.
Bitcoin's inflationary, but very drastically less.
So The United States had a gold standard more or less up until the late 19th century. Okay, so the dollar was backed by gold at a fixed rate. Banks still existed. In fact, one of the largest growth periods in banking was just after the Civil War. Banks will make money in deflationary environments or inflationary environments because of the service that they provide. Banks actually offer a valuable service into a market.
Sure they do.
We have been in an inflationary track for the last 100 years. That is going to come to an end because, as I mentioned earlier, we're on a race to the bottom. Eventually, economies are going to start exploding because they cannot devalue their currency fast enough. So banks are recognizing that that is the path, and they are going to have to make a change in their industry. And I believe personally that that change is going to be a flip from an inflationary approach to a deflationary approach. Bitcoin is a great vehicle for them to do that. But don't forget, Bitcoin can still be used in a derivatives market. They can still make money, even while we're in this inflationary madness, they can still make money in Bitcoin. The Bitcoin, the market cap on Bitcoin right now is what, 4 billion?
12 billion.
12 billion.
No, in dollars it's $4 billion.
Yeah, $4 billion. So
12 million bitcoins.
Okay, so we'll say $5 billion.
6.
Dogecoin is over $1 trillion.
Anyway, that's
But think about it, right? If you've got a $5 billion market cap, there are people at Goldman Sachs that could write that check tomorrow.
right.
So they know that this is a marketplace that they could make a lot of money. Now, why should we be scared by that? No, because they have to participate. They can't print Bitcoin, so they have to participate in the market just like anybody else.
Right. That's that's against their very nature to gain in a market environment. They gain in an inflationary market, right?
But they can still inflate their dollar side of it to buy Bitcoin.
In the 1800s, exactly the time in the wildcat period, basically you had tons of banks and little institutions, and you had a very stable dollar, meaning $1 in 1800 purchased roughly what $1 purchased in 1900. Right? And so you didn't have all that inflationary, but the banks issued their own scripts, very similar to an altcoin. And that trading, in fact, there was a thing called Grant's Currency Observer or something like that, and it would go down and it would rate the relative stability and the relative, purchasing power, but also whether or not the market felt that it was a solvent bank, basically, and so there was all discounting against each other, and that was a massive period of financial innovation, and often the depressions, as you call them, were very short-lived because the market would liquidate out and then jump back in 6 to 12 months.
Right, exactly. I think what we're going to start seeing, one of the things that I've been advocating for is, I think we're going to see the Bitcoin environment evolve to a point where you're going to have major big institutional entities, whether it be Coinbase or whoever, but I'd love to see a mesh network of small little local banks, right? Now how do you set up one of those? Well, you buy a Bitcoin ATM. And you put it in your barber shop or whatever you have. And now all of a sudden you are a bank. Okay, you're a node in the financial mesh.
It's allowed.
Right. And again, whichever country allows it will get
To lead the way.
they'll be the Switzerland. If I'm very bearish on the United States financially. I think we're heading into a very, very bad period of time. All you have to do is look at the balance sheet of the country, you can recognize that. But, there are going to be countries that say, hey, like Kenya, who say, you know what, why should we go through all of the problems and make all the mistakes that the West did? Why don't we just leapfrog it and go straight into distributed currency?
Are they well poised for that because of M-Pesa? I would assume they are probably more poised than most countries because of M-Pesa to do that.
Yes.
Technologically and in usage.
78% of the cities in Africa have at least that internet. So what we're seeing is the perfect merging of innovation and financial timing. Okay, so you have all this amazing technology. So the Raspberry Pi devices and all this kind of stuff. And you can literally operate a Bitcoin bank on dial-up internet and a Raspberry Pi device.
Yep.
That's the brilliance of the Bitcoin protocol. Okay? So now you go into these countries and say, hey, guess what? You can become a financial hub and you can attract enormous amounts of external investment by just simply saying, hey, we're going to provide a very accommodative stance towards Bitcoin. So Kenya has the ability to become crypto Switzerland. But so does London, so does New York. It's just a matter of which government decides to figure it out faster.
Any questions? I had read sometime last year that the Chinese central bank has something like $3 billion on display or something. When those dollars, when do you think that those dollars are going to come home to roost, per se? And you say the Chinese central banks are buying Bitcoin. What currency are they using to buy?
So the Chinese hold right now $1.1 trillion in US debt. Now, that sounds like a lot of money, but 4 years ago it was $2 trillion. They have offloaded almost 50% of their US debt holdings in the space of 4 years. So guess what they're doing? They're deleveraging. They're saying the US is never going to pay us back. If they do, they'll pay us back in deflated or devalued currency. So they're getting ready to unwind. I was in the Middle East recently with an Irish economist, David Williams. Every conversation we had with influential people in Dubai and Saudi was, how do we unwind from the US dollar? Where do we go? Because they recognize that this is a path that doesn't lead anywhere good. So people are diversifying. They're getting into different things: gold, silver, agricultural, oil, whatever it may be. My recommendation to you would be to buy, if you're looking for investment tips, buy oil. We're not finding any big amounts of it anywhere. And by the way, as a non-American, this whole energy revolution that you're being told about is like an emperor with no clothes. There is no energy revolution in America. The largest reserves that were found in North and South Dakota are 7 billion barrels. The world goes through that in about 5 days. Fracking is a non-starter because the average life cycle of a fracking well is 2 years, and then it becomes more expensive to pump the stuff out than it is to sell it. So if you're looking for investment, buy oil. We're running out of it. Buy food. Everybody needs it. Buy Bitcoin. It's great.
Yeah.
I don't know.
Sorry, there was one other part of that question. What are they buying? They're using a lot of their dollar reserves. So they're offloading a lot of their dollars, and they're buying, and their euro. But the Chinese are more bullish on Europe than they are on the United States. The reason is very simple. As a whole, and again, over the last 24, 48 months, you've been told, Europe's collapsing, Europe is terrible, Europe. As a whole, the European Monetary Union is solvent. They run a balance. We run a deficit. So Europe as a whole, and it's expanding all the time, is solvent. Yes, they have challenges, but they're actually in better shape than the United States is. But China is getting ready to do a couple of things. They're getting ready to end their one-child policy. So now all of a sudden you have the fastest growing middle class in the history of the world. Guess what they're going to want to buy? Cell phones and computers and clothes and vacations and strollers. If you're actually looking to set up a non-crypto based business, the travel industry servicing the Chinese community is going to be huge. So yeah, I mean, China is getting ready to diversify. The other thing they're getting ready to do is let the renminbi flow freely in the market. Right now they peg it to the dollar at a ridiculously debased rate. Once they let it free fly, there's going to be a mass exodus from the dollar into the renminbi from worldwide markets. So again, that's going to hurt us. And probably coinciding with that, they'll start dumping more of their US treasuries. Russia, as I said, this week they launched the first salvo, $20 billion in a day. There's a lot more to come. The US has to start gobbling that up. The more they gobble that up, the higher prices go. So It's another good reason to potentially look for alternate shores for your crypto business.
The higher prices, which price is that?
What's that?
You said the more they gobble up, the higher prices go. What price were you referencing?
Food, fuel,
okay.
energy.
In general.
Yeah.
So we haven't seen that inflation yet very much, and you mentioned earlier that the United States is buying back their own bonds, basically with inflated dollars, in order to increase our exports. Why do you think is the main purpose? Is it unemployment that's very visible on the radar screens of the average American, or what is the purpose behind that?
I would make a difference with that first of all. I would say groceries and energy are easily 30 to 40% up from finance.
But I'd also say in the larger economic market, the U.S. is not buying its debt. It's issuing debt up the wazoo out of the Federal Reserve, and we're sitting at these low interest rates in large part by virtue of the open market operations. Shit that happens over there with what's going on in the EU, kid fest, compared to the kind of dollars we're talking about that are coming out of the Federal Reserve here, right in New York.
Yeah, it's kind of, the problem with central banks and listing central banks is they issue their own statistics. Right, so for example, the Bureau of Statistics comes out and says, oh, unemployment dropped to 5.5%. Well, yes, that's using a metric called U3. If you actually use what's called U6, which is the way they used to measure unemployment in this country for 100 years, unemployment's over 20% right now. And you know that, because you walk around, you see guys at Target pushing strollers, and, you know, there's a lot of unemployment.
Well, I mean, Utah's an outlier, because if you're in rural Oregon, then, yeah, you really feel it. Whereas the Wasatch Front, yes.
Here's the other thing. As far as inflation goes, I bought a gallon of freshly pressed apple juice during the week. Really good stuff. It cost me $9.60 for a gallon of juice.
That's crazy.
The only reason, you know, Paul Krugman, which I'm a big fan of Paul Krugman because he always tells me how to invest. I just do the opposite of that. But Paul Krugman said there will never be inflation in America as long as you can buy off the dollar menu. That's true, but the real question is, should you be eating that stuff? Right? McDonald's shares, I've sold all my McDonald's shares now because McDonald's price margins are getting pressured like crazy because McDonald's cannot produce a $1 burger and use meat and all this kind of stuff. About 3 years ago, I posted on Facebook. If any of you are on Facebook, feel free to connect with me, or on Twitter. My Twitter handle is @ParadigmShift, and the dime is D-I-M-E, like the money. About 3 years ago on Facebook, I said, we're going to start seeing red flags in the food chain. We're going to start seeing scandals in food. About a year and a half later, horse meat in hamburgers, steak glue, pig slime. Because you can't manufacture food at the price levels that the market requires right now. You just can't. It's not possible. So the inflation is real, the unemployment is real, but if you get to decide on how it's measured, then you can say whatever you want, right? But then the other question around monetizing debt. Yes, the Fed is printing massive amounts of money, but they are also buying massive amounts of their own bonds because nobody else wants them. Why?